Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 9th of August. During the late US trading session today, the RBNZ will announce its policy decision, and the forecast is for the bank to remain on hold once again. Economic developments have been relatively downbeat since the latest meeting. The CPI rate for the second quarter declined and now lies well below the RBNZ's own forecasts. Meanwhile, the jobs market underperformed during the quarter, with the labor force participation rate dropping significantly. To make matters worse, the Kiwi is trading higher than it was back then. We believe that this soft data will probably prevent the bank from turning hawkish anytime soon. In case the RBNZ appears less optimistic on the economy or if it revises down its economic forecasts, the latest pullback in the Kiwi could continue. Last but not least, we think that there is a probability that the bank expresses a greater discomfort with the strength of the Kiwi, especially if we take into account the latest soft data. Having said that, though, this week's pullback in the currency may have brought the probability of NZD job warning down. Kiwi dollar continued trading south yesterday, breaking below the support, now turned into resistance of 0.7330. In our view, Monday's dip below the crossroads of the 0.74 key barrier and the uptrend line taken from the low of the 11th of May has signaled a short-term trend reversal. Therefore, we expect the pair to continue drifting lower and perhaps challenge the 0.7260 line soon, where a clear dip could open the way for our next support of 0.72. The catalyst for another leg down, at least towards 0.7260, could be a more dovish than previously RBNZ tonight. Even if the bank does not sound as dovish as expected and the pair rebounds, as long as the recovery remains limited below 0.74, we would treat it as a corrective move. Now, as for the daily chart, we see that the rate is back within the longer-term sideways range between 0.6880 and 0.74. This, combined with the negative divergence between our daily oscillators and the price action, increases the likelihood for further declines within the aforementioned range. Now, moving to politics, yesterday a media report suggested that North Korea is developing nuclear weapons capable of striking the US at a much faster rate than expected. This was soon followed by comments from US President Trump, who warned North Korea that it will be met with fire and fury like the world has never seen, should it threaten the US. The situation quickly escalated further with North Korea warning that it could carry out a pre-emptive operation once the US shows signs of provocation. The result was a general risk-off reaction in markets as safe haven assets such as gold, the yen and the Swiss franc rallied, while riskier assets like stocks tumbled. Moving forward, we expect market attention to remain on any headlines regarding this subject. Should tensions between the two nations rise further in the coming days, we would expect to see similar moves across the aforementioned asset classes. In addition, any such moves could be abnormally large considering the thin liquidity trading environment in August. Euro-yen tumbled yesterday after it hit resistance at 130.70 to stop fractionally above 128.60. The price structure on the 4-hour chart suggests a sideways range between these two barriers, and therefore we remain flat with regards to the short-term picture for now. Having said that, though, if the North Korea situation escalates further in the following days, the pair could break below the lower end of the range and initially aim for the 128 support level. On the other hand, if the dust starts to settle down, we believe that the bulls may drive the rate higher and perhaps target once again the upper bound of the range at 130.70. Now, as for today, the economic calendar is very light. From Canada, we get housing starts and building permits for July and June respectively. In the US, the preliminary labor cost index for the second quarter will be in focus. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.